how long the Fed has kept interest rates higher, which means how long it has been since its last rate hike and before its first rate cut. We're now above normal, as you can see. You can also see that the last 3 times this happened, when prices were higher than they are now, were signs of the global financial crisis in 2008. In 1997 and 1998, it was a sign of the tech and telecom bust. In 1969 and 1970, it was a sign of a slowdown. The founder, Cathie says that. CEO and CIO of the Florida-based asset management company Us.Thanks, the unstable monetary policies of the government are making the world a very interesting place to live. In the most recent episode of her monthly show In the Know, Cathie talks about the halving of Bitcoin, the M2 money supply, and how important it is to come up with new ideas as the world economy becomes less stable and more unpredictable. As Cathie and Yasin El-Mandra, Director of Digital Assets at ARK Invest, talk about the halving of Bitcoin, they compare the cryptocurrency's mathematically limited quantity, which is built into the unstable monetary policies that central banks around the world use. Bitcoin's production rate is cut in half every time there is a halving event. This helps keep the inflation rate stable until the next halving year. The way central banks handle money is very different. When they loosen monetary policy, they make so much more money available that the damage is almost impossible to fix. They do just as much damage, if not more, when they snug up. Cathie thinks this is exactly what is going on with the U.S. Federal Reserve right now. Rates will stay high for longer until the central bank wins the war on inflation. Cathie says this is a big mistake that will cause even more chaos in the markets and economy, like the recession in the early 1970s, the tech and telecom bubble, and the global financial crisis of 2008 to 2009. The CEO of ARK Invest thinks that a serious global financial crisis is on the way if something isn't done right away. Watch as we play clips from the movie where Cathie talks about Bitcoin's mathematically secure monetary policy, the instability of the world's money system, and how the cryptocurrency industry protects against this widespread instability. Please watch, like, and share this video. You can also subscribe to the channel and set your phone to alert you when new videos are posted. Having a chart is, as Yasin said, a discipline that has been measured scientifically. And yes, we did come up with ideas for Bitcoin with miners. I think Yasin will set that up in a moment. But this policy on money was pretty much written in 5 lines of code. I didn't know that until we talked about Bitcoin. Such a beautiful, simple, and clear design. On the other hand, look at this. Okay, this is M2 growth. And the percentage change is based on 4 years. How much money has grown each year from March of this year to March of last year, or from March of this year to March of last year? The last piece of information is the black dashed landline that you can see. That rate is about 8%. In fact, it's probably more like 6%. This chart shows a lot of information. But look at how much M2 has grown over the past 4 years. It's all over the place, as you can see in the 1960s and 1970s. It was, and it got close to double digits. In the late 1970s and early 1980s, it reached double digits. It took a while to get there. It looked like it was really sticking. I think it was 1979 when Chairman Volcker came on the scene. After that, he said, we need to get this thing under control, and he began to cut off the flow of money, and that trend stayed strong until the mid-1990s. Then in the mid-1990s, T's very interesting because it's kind of like now. In the mid-1990s, there was a domino effect of currencies falling in value all over the world. This was caused by our monetary policy, which spread around the world because the dollar is the world's reserve commodity. And Mexico was the first country to lose value. It was a big one, and I remember it very well because it had to do with Mexican stocks. Finally, after a few years, there was the Asian domino effect. I believe the Thai baht lost value in 1997. Then the value of the rest of Asia's currencies went down, and in 1998, Russia's currency went into default. Then long-term capital started to fall apart. The system is affected by monetary policy. And because it's so unexpected, people do a lot of bad things. And so what do we have now that shows what happened because of COVID? It caused M2 to grow by 12% each year for 4 years, and then there was a very sharp slowdown. This is different from the 1970s, 1960s, and 1970s, when there was a sort of trend-driven acceleration and a stability near double digits. A lot of money was thrown at this system to keep it from going into a full-on slump. You can see that this line will drop toward 2 to 3% if, by the end of the year, we reach a level of year-over-year growth that stays around 0. This is something we've only seen once in the 1990s. After that, everything went crazy around the world. Money problems all over the world. Because of this, I talked to Yasin a lot about these drops in value. In emerging markets, anyone with an internet connection can now pretty much set up or buy an insurance policy in the form of Bitcoin. If you look back at the halving in this purple line, it doesn't look at all like the volatility you see in monetary policy in the US and around the world. And of course, people are in charge of it. In 1971, when the United States stopped using the gold standard and closed the gold window, monetary policy went completely crazy. Since then, it has been out of control. Even though people have tried to control the effects of inflation, they go too far in both directions. We think they're going too far on the downside right now. This is the real Fed funds rate. We can say that the Fed funds rate is between 5 and 5.5%. That brings us to 2.5%, as you can see by taking away 3%. Inflation is expected to go down, and the markets don't think the Fed will cut rates until November. If they don't cut rates while inflation is going down, this line will move closer to 5%. We haven't really seen that since the 1980s, when inflation was still thought to be embedded or likely to return to double digits. Today we're not like that at all. The Fed has kept interest rates higher for longer, which means the length of time from its last rate hike to its first rate cut. You